All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about both of my portfolios. Combined, roughly, I have about $30,000 worth of investments. And what I want to talk to you guys about today is what exactly I've done with these portfolios. One, I have sold KLIP. I want to talk exactly how much KLIP shares I had and how much I exactly sold. I think in total it equates to about 200 and something shares, but we're going to add that up on the calculator and add up exactly how much our dividends are going to be depleted. Then we are also going to be talking about what moves I made in my other Questrade portfolio because I bought some more YMAX. So that's what I'll be talking about today, what moves I made in my $30,000 stock portfolio. If you guys do enjoy this video, we're up to 5,523 subscribers, 128 in the past 28 days. That is fantastic. Okay, so the big news for today is that I sold off of my position in KLIP. And it wasn't like I had a small position either. I had 154 shares in USD and about 56 shares in CAD, which is Canadian dollars. So what I want to do is add these up to give you the exact amount of shares. I had 210 shares total of KLIP that I sold off. And the reason why I sold out of KLIP was because I wasn't seeing the percent returns that I wanted to see. And it's not all super clear because KLIP writes cover calls on KWeb. And the reason why I sold KLIP in the past was performing okay. It's always been trending down, but it's also due to the fact that they pay out such high dividends. KLIP is known for paying high dividends. They pay out roughly about 40%, if I could find that somewhere down here, 37.56%. So a fantastic monthly dividend. But the thing was, they in recent times have not kept up with KWeb, and that is why I'm selling. Because in the past under a month, you see here, even within the past week, KWeb has rose significantly, gone from roughly about $25 to almost $40. That's an increase of almost 60 to 70%. And what has KLIP done in that past month? Not very much. It's gone from 210 to 275 at its peak, and then paid out a dividend back down to 240 where we currently stand. And that's when I decided to sell. I sold at about $12.41. So here at $12.40, KLIP is currently standing, but I sold just because we didn't see that run. And this is what I was afraid of with KLIP. Look, we didn't see the run up in KWeb because KWeb had such a spectacular run up, even today going up about 6%. KLIP could likely capture about 10 to 15% of that run up. It's captured about 6%, but it's not going to capture this whole 50 to 60% movement because it's a cover call ETF. It is a capped strategy. That's what a cover call is. It generally looks at an underlying stock or an underlying ETF, and it wants to see very minimal movement, and it collects premiums on very minimal movement. But as soon as you get up into the 15-20% moves within a month, you start to risk losing some of the potential upside, which is what we got with KLIP. And now we have KWeb, which is sitting at a what I would consider a decently high price point. We look to the past 6 months. This is the highest that KWeb has most likely been in the past 6 months. And what I want to do is just kind of see, there we go, if my chart loads, fantastic. You can see we're at a high point for the past month, 6 months, and for the past year. When we go to the 5-year calendar here, we could see that KWeb actually reached a mark about $90 or so. So it still has a lot of room to grow, which is awesome. But if we're not seeing that growth within KLIP, and KLIP's what we're investing in, why are we investing in the first place? We need to see some kind of capital appreciation from the capital appreciation seen in KWeb. And when we're not seeing it, it's not performing as it should. So that is why I decided to drop KLIP. And one major thing going against KLIP as well is, look, KWeb had a great run up. The underlying stocks, I have them here. Alibaba continue to have a great run up today. Tencent as well, great run up. These are the reasons why KWeb is doing so well. But what if KWeb falls? What if these underlying stocks, all of a sudden, people say, wow, they've risen up so fast. I put my money in. I'm getting a great return. I want to sell. And they start to have big declines. We see big declines in KWeb. Well, generally, we're going to see big declines in KLIP. And with cover call strategy, the one thing that's important to keep in mind is they're capped on the upside, but they have unlimited potential to the downside, meaning that whatever KWEB does to the downside, KLIP could potentially take. And if we're not seeing amazing movement when KWEB is making these 6% moves, like look at this, 6.43% today, and we only had 0.24%. That's ridiculous. Since we did not see any big moves, I decided it's time to cut KLIP and take it out. What am I going to do with this money? Right now, I'm currently deciding, will I reinvest back into KLIP? It totally depends. I would only reinvest back into KLIP if I see a major drop in KWEB and as well a decent drop in KLIP as well, because I'm not going to be buying KLIP again if KWEB maybe drops to $25, but KLIP kind of stays the same. It kind of doesn't. I'm not sure. It's basically got to feel the front of KWEB's downfall, because I don't want to buy a falling stock. When KWEB falls, which I assume it will in time as prices have risen ridiculously fast, I want to see KLIP also fall as well before I get back in. So that's kind of where I stand on that. That's just my personal opinion. And another thing is with our Questrade portfolio, where we mainly buy YMAX, we also kind of added a few more shares to YMAX. So you could see here we have 591 shares. Before we were sitting at about 576. So you could see we added 15 shares today. And basically what that was I added in the dividends received over the last little while from YMAX. So you can see here we received $127, and prior we also, if I load some more, we received $130. This was due to the weekly dividends. You can see that right here. And as well, I want to say thank you to everyone who was using the referral code, which is in the description below. That as well in turn helped to bring in a little bit extra income, which we use to reinvest. And as well, $50 will be could be reinvested on your side if you use the referral code that is in the description below to set up a Questrade portfolio. But basically using this, we acquired 15 more shares of YMAX, and at the current kind of rate here, we could see that weekly, if it's paying out about 22 cents per week, we're looking at about $130 stable. If we look at, just to kind of make it super clear, we had 0.227 as the first dividend. So we're looking at a bump up of about $4 or so every single week. And that's just from dividends that we have collected. That does not include any extra money that we could potentially add in. So this was just an update for my portfolio. I wanted to kind of make clear why I sold KLIP, why when looking at KWEB, it's had a crazy run up and we're not seeing the same run up in KLIP. And that's concerning. That's why I wanted to sell. I want to see KWEB come down. If I ever think about buying KLIP again, we'll see what KLIP's price kind of returns to, if it trends down with KWEB or if it stays roughly the same. As well, we added a few more shares to our YMAX position, which is only going to provide more and more weekly income, which at the current moment is our goal. Our goal is to build up this income, and that's what we're on course to do, and we're going to continue to do that. So if you guys did enjoy this video, please do remember to subscribe. We're up to 5,523 subscribers. Remember, get your referral code. That'll be in the description below of this video. You'll get $50. I'll get $50. Let's invest together. Let's make some money. I hope you guys enjoyed this video. If you did, remember to subscribe, and I will see you guys in the next video.